I am Ghost Bank, and Ghost Bank is my business. Senior, my bank, my future, and my choice.
As the moderator mentioned, my name is Sheila Mboga Fande. I'm the founder of Financial Wellness Center. Now, for me, I'll just speak a little about how to create a sustainable financial wellness system in your life or in your business. Maybe I'll just say I'll give a little history about Financial Wellness Center. We started in 2019 and we have so far reached to around 5,000 people globally, and we do our programs online because we have our audience virtual, connected globally. So financial wellness helps people acquire money skills that can help them manage money and become better at achieving their financial goals. We all have goals. Unaweza kuwa you have a goal to have even 50K by the end of 2022, but how do you get there? That is where financial wellness comes in. We give you a strategy. We tell you that, okay, based na income unapata, I think you can save this amount, or based on how talented you are, you can monetize your talent so that you can make money, and itakusaidia for you to make that amount of money. Now, a sustainable financial wellness program is something that will allow you to achieve your financial goals, but at the same time, you live a better life. Usikue tunakupata unakufa na njaa because you want to save money for the year, you know. So a sustainable financial wellness program includes you have a good budget, you also have a saving plan, and it does not stop at saving. You go ahead to do something, you invest the money so that you can multiply your money. How do you multiply your money? Where do you invest? Yes? Yes, money market funds, that is MMF. Anyone else? Yes, my dear? Cryptocurrency, Another person? All that you have said is right and correct. Those are investment tools that zitakusaidia ku multiply your money. And now the good thing is that, for example, there are tools zinakusaidia ku invest with as little as 1,000 bob. How many of us washai nunua pizza? Kama ushai nunua pizza? Hata kama ushai nunulia mtu, just lift up your hand. Ama kama ushaipelekwa kukula pizza, right? Now, pizza costs 1,000 bob or 1,000 plus. With money market funds, you can invest that 1,000 bob. So we can say, instead of you eating pizza this month, if you eat once a month, you can decide, let me not eat pizza, I put it in money market funds. And doing that will help you multiply your money because the interest is there and it keeps growing. Now, as a youth, you need to have such kind of investment tools. Imagine if you started investing 1,000 when you were 18. By the time you get 28, you will have money. And the 1,000 that we have now, 10 years to come, the purchasing power itakuwa imeenda chini. So if you put the money in something that can allow it to grow, that is through interest, that money will have multiplied and you won't feel the pains of inflation. So it's very important when you are saving, usiweke pesa chini ya mattress all the time. Weka even for 3 months, then put it somewhere where it can multiply. That way you'll be able to achieve your goals and you'll be able to change your life, right? Now, another thing we need to talk about when it comes to sustainable financial wellness is deni. How many of us have Fuliza? Fuliza. Okay, how many don't have? Wow, congratulations, congratulations. We see that at least we all know what a debt is, and we know kuna Fuliza. Now, it's not bad to have a debt, but it's very bad to have a bad debt. What is a bad debt? A bad debt ni ile deni ulichukua ukaenda kununua pizza juni terrific Tuesday. You see, but you can take, for example, you can take Fuliza put it in an investment tools, hizo zenye tu tumesema, get a return from it, and now start using that return that you're getting to repay the fuliza. Now, this simply explains what we call debt management. Debt management is whereby unachukua deni na unajua venye unailipia. Hauchukui deni just because you want to help, you want to eat or you want to consume. You can take a debt to do business, and a business that you know iko na returns. Usichukue deni kufanya forex na haujui how forex operates, right? We've seen a lot of people committing suicide because they took a debt, and then walipochukua hiyo deni they invested in something that they don't know, and now all the money imekunywa maji hivyo. So it's very important for us, when you're taking a debt, have a plan. What are you going to do with that debt? You might say, I'm a student, but you have access to mobile money lending. Now, don't misuse that, because it's going to affect you. Remember, if you're going to take a debt, si pesa yako, ni pesa ya mtu na unamlipa na interest. So you better make use of that money. You may say, why is it that, why am I saying debt is good? Most of these big businesses we see around, most of them, they are run by debts. But it's because they have, like, it's a circular flow whereby kuna pesa inaingia kwa biashara, wanatumia pesa wameomba kufanya cash flow, then wanalipa. Sasa wewe, for example, you don't have an inflow of money, but you're taking a debt. You'll find yourself unable to repay that debt. So it's important when you're taking a debt, ensure you have a plan how that money itakuwa repaid. Otherwise, don't take it. You might be asking, na kama niko kwa fix, how will I do that? If you're in a fix, it's always recommended borrow from friends, or you can even sell an item that you're not using. Sindio, kuliko uingie kwa deni, then you keep paying interest rate, inaweza kulemea. So those are the key things that build a financial wellness program. Inakusaidia such that if you start now, because I can see we are young adults here, if you start now, in 10 years time, you'll be able to have a sustainable financial life as compared to someone mwenye hajaanza saizi. Another thing, if you're taking a student loan, go and ask if you can be able to service it while you are still a student. So if you're getting, for example, a monthly pocket money, or from gigs you're getting some money, you can be servicing your student loan while still a student, so that by the time umalize shule, the amount you're supposed to repay haitakuwa juu sana, and that saves you kulipa a higher interest. Now I'll be taking any question before I can give the meeting back to our moderator. Sure, thank you very much for asking such a great question. Money market, it's an investment tool that you can get through various firms. There are brokerage firms that offer that service. So you can walk into any firm that has an insurance, for example, Britain, CIC, Saiton, they do have that product. Now, when you walk into there, you just ask them, I need to invest in money market funds. You will need to provide your details. After you've provided your details, you also now need to fill them out, give them the copy, and then the amount of money, which is usually a minimum of 1,000 to invest in. There are some that will require you to have 2,500 to open, and then you can be topping up with 1,000, either every month or every time unapata. The good thing with money market funds is that you are able to access that money within 24 to 48 hours where need be. So, most companies have an app. So utakuwa unaangalia pesa yako, because I know there are people who cannot sleep when their money is far away from them. So, most of them have an app where you can open it and then you just check and see even the interest that your money is earning. I highly recommend, especially for us young adults, because we may not be able, for example, investing in treasury bills or bonds, they require you to have a minimum of 50,000. So you see, by the time we just say 50,000, it might be muda mrefu, but you can at least start with something like money market fund. Thank you so much for asking. Anyone else? Yes, please, dear.
Can you elaborate on treasury bills and bonds, interest rates when you invest 100K? How do interest rates returns work?
Sure, thank you very much for asking such a great question. For treasury bills, they are done by the government. So you will have to go to Central Bank of Kenya and tell them you want to invest in treasury bills. Now you require 50,000 as the minimum investment, and it's able to repay after 3 months. Normally, if the economy is stable and it's okay, you need to get at least 10%. Sometimes it can go down to 9%, but usually inachezianga 10%. Now, then they pay you the interest beforehand. It's not after. So you'll get, if you need to put 50,000, you'll get the interest rate beforehand. The interest rate beforehand. Then after 3 months, you'll submit your bank details as well. After 3 months, your pesa itakuwa returned back to your account. You don't have to go there. Now, if you want to reinvest, then you have to again go and bid and purchase again. The first thing you need to consider before you invest is your risk appetite. Are you someone who is a high risk taker ama wewe ni low risk taker? A high risk taker, tunasemanga you can invest in highly volatile markets. For example, the stock market, whereby your money you can lose your money in just a minute, all of it, or you can gain more. Now, if you are a high risk taker, you go for high risk investments. If you are a low risk taker, you go for low risk investment. Then you have to check your goal. Is it a long-term thing or a short-term thing? Now, for short-term thing, you can go for something like the money market funds. You can also go for things like the treasury bills. Those ones, they run for 3 months. But if it's something for long-term, this is where I tell you can take like a life insurance to just secure your loved ones after you pass. You can take a treasury bond, which is usually 5 years plus or 10 years and above. The other question beforehand, it means, for example, for treasury bond, if the bond has been released at a purchase price of 100K, you will pay 90K if the interest rate is 10%. So you see you've earned your interest, but on paper it will be 100K. And then after the maturity, they'll return to you 100K. So you see you have earned beforehand and upon maturity. There was another question? I think I've answered all. Thank you very much. Kuna mwingine who has a question? Yes, please.
Hi. Jerry Tony, taking economics. My question is between MMF and open a savings account. Which one is better?
Thank you very much. I would say again, it depends with your goal. An MMF has higher interest, while a savings account has a lower interest. Most savings accounts will give you maybe 2% or 5% or sometimes 10%. But again, it depends. What is your goal? What is your goal? Do you want to be accessing that money very quickly, or you just want to save for a period of time, then you can invest? For example, if I want to invest in treasury bills, I would go for a savings account to help me get the discipline to accumulate the money, then I can go and invest that lump sum. Now, or if you want to have an emergency fund, and then the savings account you're having is accessible maybe within 24 hours, that can allow you to do what? To be able to access the money faster compared to an MMF, which is usually 3 to 5 days, working days to get the money. Now, the advantage of an MMF is that the interest is usually higher. It's around 10%, 9% or 8%. So that is the advantage. But again, it goes back to why are you doing it and how long do you want to do that? Any other question before? Yes, please. Yes. A treasury bill is a short-term tool that is offered by the Central Bank of Kenya. So a treasury bills, you invest money for 3 months or 90 days. Then a treasury bond is a long-term investment tool issued by the government through the Central Bank of Kenya. So it takes minimum 5 years or 10 years or 15 years before that investment can mature for you to get the money. So if you are going to invest in a treasury bond, if you give them 100,000, they'll only get that 100,000. If it's a 10-year bond, you'll get it after 10 years with the interest as well. But you won't get it in between. They'll just be giving you interest if it's twice a year. Yes. So if you're looking for something for short term, you should go for a treasury bill. But if you're looking for something for long term, then a treasury bond should work.